January 27th, 2021. The air in Citadel Securities' office is thick with tension. Phones ring incessantly, and Ken Griffin stands at the epicenter of a financial storm. High-level employees of Citadel and Robinhood exchange frantic communications. The room buzzes with urgency as trading restrictions loom. Can Citadel navigate the chaos that threatens to unravel everything they have built? December 10th, 2018. Inside the bustling offices of three major broker-dealers, the mood is grim. The SEC has just announced penalties totaling $6 million for these firms. Their crime? Providing deficient blue sheet data, a critical component in tracking and regulating trades. Among the numbers are 80 million trades left unchecked. The implications are severe. Trust is the currency of Wall Street, and today it's taken a hit. For ordinary investors, blue sheets are invisible guardians, ensuring fair play in the markets. But when these sheets are flawed, the ripple effects can shake confidence. The penalties, $3.5 million, $1.25 million, and $1.4 million, are stark reminders of the cost of oversight failures. As the dust settles from these penalties, the financial world braces for what comes next. The GameStop frenzy is still a few years away, but the seeds of regulatory scrutiny are already planted. The market's pulse quickens with every trade, every tick of the clock, and every oversight that slips through the cracks. Behind closed doors, whispers of undetected coding errors and inadequate validation processes begin to circulate. What happens when the systems designed to ensure market integrity falter? The financial world is about to find out. January 13th, 2017. In the heart of Citadel Securities, a decision weighs heavily. The company agrees to pay $22.6 million to settle charges of misleading clients about pricing trades. It's not just a financial hit, it's a blow to their reputation. Ken Griffin, the driving force behind Citadel, faces the challenge head-on. He knows the stakes. Trust is paramount in the financial world. As the news breaks, the phones start ringing, demanding explanations, assurances, a way forward. The settlement is a wake-up call. Behind the scenes, a dedicated team works tirelessly, dissecting every part of their trading systems. They uncover a coding error in their automated trading system, a flaw that could have had far-reaching consequences. It's a race against time to fix the issue, to ensure that such errors remain buried in the past. Processes are overhauled, systems are fortified, and a new era of vigilance dawns at Citadel. As January unfolds, Citadel's gaze turns toward the burgeoning world of cryptocurrency. Plans are set in motion to transact on exchanges like Coinbase, Binance, and Crypto.com. It's a bold move, a calculated risk. The world of digital currency is volatile, yet ripe with potential. Citadel aims to be at the forefront, leveraging their technological prowess to navigate this new frontier. Meanwhile, the financial landscape shifts. Social media buzzes with speculation and predictions. r/Wall Street Bets, a subreddit filled with retail investors, begins to stir. They believe certain companies are undervalued, and they are ready to act. The stage is set for a showdown, a clash of old money and new voices. But Citadel is no stranger to the currents of change. In the boardrooms, strategies are crafted, innovations are embraced. The firm positions itself as a bridge between traditional finance and the digital age. Their advantage? A deep understanding of markets, a relentless drive for precision, and a readiness to adapt. Yet, as they build their empire, a storm brews on the horizon. Allegations begin to surface, whispering of undue influence and trading restrictions. The GameStop saga is approaching, a frenzy that will test the very foundations of the financial world. January 27, 2021. The air inside Citadel Securities is tense. High-level employees are locked in a flurry of communications with Robinhood. The topic? Trading restrictions. The GameStop frenzy has reached a fever pitch, driven by the r/Wall Street Bets community. GameStop's stock price has skyrocketed by 1,500%. Phones buzz incessantly. Every call, every email feels like another piece in a puzzle that could unravel at any moment. In the midst of this chaos, Citadel faces allegations. Prosecutors allege Citadel Securities exerted pressure on Robinhood to restrict trading. It's a claim that, if proven true, could shake the very foundations of trust in the financial markets. The stakes are monumental. Behind the scenes, Citadel's leadership is on high alert, aware that in September 22, 2023, the walls of Citadel Securities headquarters seem to close in as news breaks. The SEC announces settled charges against the firm for violating order marking requirements of short sale regulations. The penalty? A hefty $7 million. It's a blow that sends ripples through the financial world, a stark reminder of the firm's recent troubles. On the same day, a class action lawsuit is filed in a federal court in Miami. Citadel Securities and Robinhood find themselves in the crosshairs once again. Allegations swirl, casting a shadow over both companies. The courtroom drama promises to be intense, with high stakes for all involved. The numbers tell a story of their own. GameStop's stock price had soared by 1,500% during the frenzy, a meteoric rise that left a trail of financial chaos. The aftermath saw $27 billion in value erased from GameStop, a staggering figure that highlights the volatility of the market during those tumultuous days. Behind closed doors, Citadel's executives grapple with the fallout. The coding error in their automated trading system had resulted in 80 million trades with incorrect data. The consequences of these inaccuracies are severe, leading to a settlement of $22.6 million. This includes the disgorgement of $5.2 million in ill-gotten gains and more than $1.4 million in interest. The penalties don't stop there. Broker-dealers face additional fines, with Citadel's penalty alone amounting to $3.5 million. The financial impact is undeniable, proof of the scale of the errors and the regulatory scrutiny that followed. As the legal battles unfold, the financial world holds its breath. The implications of these events reach far beyond the courtroom. Trust in the markets is shaken, and the reputations of those involved hang in the balance. For Citadel, the path forward is fraught with challenges, and the next chapter is poised to test their resilience once more. Inside the bustling corridors of Citadel Securities, the tension is palpable. The events that have unfolded paint a picture of a firm caught in the eye of a regulatory and financial storm. The coding error that led to inaccurate trade data and the subsequent $22.6 million settlement are stark reminders of the fragility within complex financial systems. Trust, once lost, is not easily regained. At the heart of these challenges lies a simple truth. Transparency and accuracy are non-negotiable in the world of high finance. The penalties and lawsuits are not just about monetary loss. They're about restoring faith in a system that millions rely on for their financial futures. Citadel's entanglement with Robinhood during the meme stock frenzy further shows the interconnectedness of financial entities and the ripple effects of their decisions. As Citadel navigates these choppy waters, the lesson is clear. In the fast-paced world of trading, where fortunes can rise and fall in seconds, the integrity of data and the robustness of processes are paramount. The stakes are high, and the consequences of failure are not just financial, but reputational. The next chapter awaits, with new challenges and opportunities on the horizon. In a quiet moment inside Citadel's headquarters, the echoes of past decisions linger. The courtroom drama has played out, but its reverberations continue to shake the financial world. Citadel's $22.6 million settlement for misleading trade pricing is a stark reminder of the high stakes involved. The firm's link to Robinhood during the meme stock frenzy shows the fragile trust in financial markets. As the dust settles, Citadel faces the monumental task of rebuilding credibility. Their story is one of redemption in a world where transparency is everything. The next chapter looms, promising new tests for Citadel's resilience. Stay tuned.